Alrighty folks, today we're going to do something fun we haven't done in quite a while. We're going to look at the public account. I'm going to share with you an update of the public account screenshot here of what positions I hold in here, how big the positions are, and I'm going to share my perspective on these stocks in let's say over the rest of this year, the last 9 months of this year, and if I think these stocks are going to do well, do bad, what's my plan with them? Am I planning on averaging down on some positions or selling off some positions, things like that? We'll cover all that in this video here today, and try not to laugh. It's been destroyed since fall time, essentially. Since about fall, this account has been hurt very heavily. Let's call it that, okay? So don't laugh at it, okay? But yeah, we've been destroyed on a lot of stocks here recently. But this is a public account, okay? So we'll go through this position by position here in just a moment, but I just want to share, kind of that position sizing. So Tesla makes up 460,000 of the portfolio, is a $1.36 million portfolio here. Tattoo Chef makes up 235. This is in terms of accounts I have the most money in. This is the second biggest portfolio for me. The only account I have bigger than this is my private account. This portfolio, everybody in the private stock group can see every single move I've ever made in the history of this account. We started this from scratch about, it's probably like 4.5 years ago now or something like that. It's been a while, and that's where it's at now. Okay, last year we took 6 figures in gains in this portfolio. Tattoo Chef makes up 235 of the portfolio. Corsair Gaming makes up 159. Revolve makes up 100,000. So those are the 6-figure positions in this particular portfolio. We have Skyworks Solutions makes up 86. We have Honest makes up 83. We have Meta makes up 77,000. We have The Planet makes up 68,000. We have Dropbox makes up 34,000. Elf makes up 25,000. Then we have a couple really small positions here. 21,000 Avant Brands and 6,800 Voyager Digital there. And we do have some cash available. I've never used any margin in this portfolio. Basically, I could if I want to. The portfolio is set up for margin. I've just always been really divided if I want to do margin in the public account. And the reason being is a very controversial subject, right? And the problem is this is kind of like a model portfolio where everybody can see every single move I make in this. And if I start to do any sort of margin in that portfolio, I feel like other folks are obviously going to feel like it's okay to also margin, and that I'm a little concerned with, to be quite honest, because margin can be highly dangerous, and it usually starts out like, I'm just going to do a little bit on margin, just a little extra money because this stock's down, and I think it's a great deal, right? And next thing you know, you invest heavier because you're trained as a long-term investor to buy the dip, right? And so next thing you know, all of a sudden you're at like a 30% margin. You're like, whoa, I've got quite a bit on margin now, and then all of a sudden the market drops more, or those particular stocks drop more, right? Next thing you know, all of a sudden you're at 40% margin, and then you're at 50% margin. All of a sudden, next thing you know, if you get any drops any further, you're in margin calls, right? And it's like, how did this happen? And so that's what's been very divided for me, and that's why I haven't done any margin in this portfolio yet, despite the NASDAQ as of last week. At least NASDAQ was in bear market. Russell was in bear market a week ago today, essentially, right? But I can't pull the trigger on it because I feel like if I do it, I feel like everybody feels like they're going to be fine doing margin as well, and I just feel like that's a slippery slope, so that's since this is a model account, it's hard for me to make that type of decision, okay? So let's talk about each of these positions, if I'm planning on selling them, buying them, holding them, those sorts of things. So first off here, Tesla Myesla, $460,000 of the portfolios in Tesla Myesla. So obviously a huge weight in the portfolio, and mainly because it's gone up so much over time, right? So when it comes to Tesla, the stock topped out at $1,200+. The company's executing on all cylinders right now, and no pun intended there. I mean, they're doing an amazing job running the business. Every day I see more Teslas out on the road. The superchargers get busier and busier, and the numbers they're putting up are nothing short of extraordinary. So Tesla, I'm just a happy holder of right now. It's not a stock that I'm like, I've got to go buy Tesla today, mainly because of valuation concerns I have around it. And those valuation concerns I have are around forward P mainly, and around price to sales ratio also. And it's like, I can't go necessarily run out and buy this stock tomorrow. Although I love Tesla and I love holding the stock, it's just kind of in a hold position for me right now. As far as selling it, I also don't want to sell it because Tesla, since I bought this company in 2018, 2019, has done nothing but beat my expectations. Like, everything's beat my expectations in terms of the stock price performance, in terms of what they've done with the underlying fundamentals of the business model. Everything has just consistently beat what I've ever expected with this company. So for me to cash more Tesla, I just can't. I've cashed a lot of Tesla over time, and usually I always regret whenever I cash out of Tesla. So those 500 shares, I'm just planning on holding them for right now, and we'll see what happens over the coming months and the coming years. But that's kind of my position right now, and not buying it. There's a lot of other stocks I just feel like will do much better risk-reward profiles than Tesla over the next, let's call it 3 to 5 years. Now, Tattooed Chef, obviously this is one I think everybody knows if anything, I'm planning on averaging down on. This one's we've been destroyed on 26%. And, I got to say, 2 parts, okay? Like, first off, let's ask ourselves, like, why is Tesla or Tattooed Chef fallen 26%? Why am I down 26% in this portfolio? My cost base is $16.52, okay? In my opinion, there's 2 core reasons. The first reason is the company's to blame for this, okay? The company overpromised and underdelivered when it came to numbers, flat out. They overpromised and underdelivered in 2021. And if you look at all the quarters they reported in 2021, almost all of them were like basically overpromises and underdelivers. And so the company has to learn from that, and I think they have, based upon what I see from what they guided for the revenue and whatnot for 22 for this company and kind of the way they're setting it up. But they made a big mistake, and they're not the only public company to do that. Matter of fact, just about every public company I've ever tracked has made mistakes in their time period where they overpromise and they underdeliver and they disappointed shareholders, including my beloved Tesla has done that before, and Elon Musk has done that before, where he would overpromise things and he would underdeliver on them. And that's part of the reason the stock got absolutely destroyed in 2018, 2019 when I was able to get involved with it, right? Is because he was overpromising things and underdelivering on those promises, essentially. That happened on Tattooed Chef. And so they kind of deserve, I deserve to be down in that position because of that, essentially, okay? The second part is we went from a massive retail influx in the market to retail left the market in mass. I think we all know that, right? The only folks that are still in the market now are people that are planning on doing this for the next 5, 10, 15, 20, 25 years, okay? That's all that's left in the market. And this was a very heavily invested retail stock, right? And so as those folks left the market and cashed out, Tattooed Chef was just one of a list of probably 20 or 30 stocks that were heavily bought by retail investors or traders, whatever you want to call them, that ended up leaving the market, right? There was basically from about, I call the retail market peaked in January 2021. And from that time until about January 2022, just about anybody that was kind of iffy about the stock market left the market during that time. And now all we got left is those folks, right? That are really in this for long term. So Tattooed Chef, I'm looking to buy more shares, and it's a big year for them. They've got to come through with their numbers. That's the bottom line. Tattooed Chef, this is kind of like a put up or shut up type year for them. They've got to put up the numbers. They've got to report those awesome numbers quarter after quarter. And there's a lot of people that are tracking Tattooed Chef. And the one thing I'll say about Tattooed Chef is there's a lot of people that have bought this stock in the past and got out of it, right? That are still watching the stock. And I hear it all the time, like, I sold out of that, but I'm going to keep an eye on it, see what they do for numbers. If Tattooed Chef starts, basically under-promising and over-delivering and putting up some great revenue growth, improving their margins, a lot of people are looking at their margins and want to see improvement there, and get closer and closer to profitability. I think there's a lot of people that will end up coming back to Tattooed Chef stock, and the stock will thrive in that sort of environment. But at the end of the day for Tattooed Chef now, it's all about putting up those numbers. That's all it's about. They put up the numbers over the next 4 quarters, this stock will thrive. They don't, and it'll continue to just be a floundering stock that's going to be a $10 to, let's call it $13 stock that's really just going nowhere. They've got to put up the numbers, okay? Bottom line. Corsair Gaming, CRSR, getting destroyed in this one, 35% down. I'm looking to definitely average down on Corsair Gaming. Corsair Gaming, they just had some insane comps to comp against. This is one that I don't really blame the management team at all in this one. This isn't like a Tattooed Chef situation where they overpromised, underdelivered in 2021. Corsair Gaming just had impossible comps. Like, they had everybody at home, right? Spending all their time at home to all of a sudden there's this situation where the world's starting to open back up, and their comps they had a comp against year over year were just impossible, right? Including this quarter we're in right now, that's going to be another extremely tough comp for Corsair. It starts to get a little bit easier in Q2 and then really gets a lot easier in Q3, Q4. So as far as Corsair Gaming, This is one of those stocks that I think shareholders, you already kind of see it a little bit in the pricing action with Corsair Gaming, in terms of the stock price now back over the 20s. But I think this is one of those stocks that I think starting about in Q2 is going to be more and more people that start to flood in this. This is a profit machine. It's a cash flow machine company. It's an established business model with a great management team in place. Has been leading this company since the 90s and Andy Paul, right? And so I look at Corsair Gaming as a company where I think a lot of folks are going to start to get in, including Wall Street. I'm not just talking about retail. I'm talking about Wall Street when it comes to Corsair Gaming. Hedge fund managers and fund managers in general will start to get in the stock, in my opinion, starting around Q2. And the reason being is they know that, okay, after the Q2 numbers, the comps start getting much easier and Corsair Gaming could start putting up some more normalized growth again, which is obviously going to excite the market. And so you'll have the early folks start to get in there. So Corsair Gaming, I actually like it a lot. I think it's in a sweet spot. And if anything, I'm looking to average down on my position there. And I got a lot of averaging down to do in Corsair Gaming. Let's put it that way. By the way, if you want some free stocks from Moomoo, check out my pinned comment down there. They're doing right now a deal where you deposit any amount of money, you get 3 free stocks. It's pretty awesome. Okay. Next up here, Revolve. So this one we've done very well with 376% up 81,000 in this on this position, right? Revolve's just a hold for me right now. I do think it's I think it's actually attractive from a valuation standpoint right now. Valuations come down actually quite a bit over the last, let's call it, 5-6 months. But when it comes to Revolve, it's just a hold for me. And the main reason is I just think there's better places for my money right now in terms of if I'm buying a stock. Revolve is another one of those companies, kind of like Tesla, that's just done better than I've ever anticipated them doing. And so this is not a stock I can cash out of right now. I just got to continue to hold that position. I've just been really thrilled with kind of their performance. And I feel almost wrong to sell a stock like Revolve. It's not like it's at an insane valuation. Look at the forward P of this company. And not only that, right? It's not like they've ever disappointed me or even just like, they've always just done kind of better than I ever anticipated in an extremely tough environment. And if I think about the world opening back up, office environment opening back up, events getting back to normal and things like that, who's going to benefit in a massive way? Revolve's going to benefit in a massive way from that in their clothing business. So I can't sell out of that one. Skyworks Solutions, another one that's just a hold for me. I can't buy the stock, although it does look actually pretty darn appetizing. Huge 5G player, and 5G just continues to take off in a massive way. Skyworks Solutions, just a company that executes perfectly, I would call it that. Great income statement, great balance sheet in this company, always cash loaded with minimal debt, if any debt ever. So, and also a dividend play. They also pay me out dividends. So I love Skyworks Solutions. A hold for me more than a buy, just for the mere fact that there's other stocks that I'm down significantly on that are more calling my name. Let's put it that way. Honest Corporation, HNST, down about 20% on Honest so far. Definitely another company I'm looking to average down on. When it comes to Honest, let's be very clear. This company hasn't done anything wrong. As a matter of fact, since they went public in 2021, they've done great. Their last quarter was unbelievable. They're taking market share from the big dogs, okay? They've done nothing but a great job with their business model. I'm looking to continue to buy that company. They've got a legit management team. A lot of their executives came over from Clorox. Like, this is a legit, management team at that company. This isn't like they're kind of new to the public market, so I don't know about them. No, like, these folks have experience, like mad experience with the biggest of the big companies. They know what they're doing. And so I look at that company, and I'm nothing but a happy buyer of that one, and just planning to continue to buy the dip on Honest. And I would love to build this one out to a much bigger position. I got it to I think it's my second biggest position now on my main private account. Obviously, in this account, it's lagging, so I'm going to need to get on it and do some buying when it comes to Honest. Okay. FB Meta, it's a buy, but the tough thing for me with Meta is they're spending like there's nobody's business right now, right? Meta's just spending money like crazy for their metaverse opportunity. And this is a situation I'm looking at when it comes to Meta where, I don't see that spending slowing down anytime soon. So it's going to hurt profitability. Bottom line, if you want to understand, Meta's profitability will be hurt because of how much they're spending essentially right now, right? But I will say Meta's a steal deal right now. It's just... Is Meta the type of stock that can 3x, 4x, 5x over the coming years? With how much they're spending on metaverse, I'm not too certain about that, to be quite honest, right? Can Meta double up over the coming years? Yes, but based upon everything I see and how much they're spending on metaverse and how that's going to take years and years to play out, that's a tough one for me to kind of see, because the thing with the metaverse is Wall Street doesn't understand that concept. even though Facebook is looking like they're going to be the number one player there because their Oculus brand and their reach and everything like that, right? Oh, Jesus, scared the crap out of me. Did you hear that door slam? Holy smokes, okay? Although there's that sort of opportunity, Wall Street just doesn't get that opportunity right now. So let's say hi to the ghosts. The ghosts are here, okay? But we're not going to mind them because we're in the middle of the video right now. The Planet, okay? So when it comes to Planet, we're down about 2% on this one. There's another one that I need to average down on. It's not a big down position for me, like 1.9%. That's pretty lame, to be quite honest, but I definitely need to add more Planet shares in this portfolio. You know, a $68,000 position, it's decent size, but I need to add more here. And if we look at cost basis now, $223. In this portfolio, I had it at like $1, I think 25 for a while there, but I recently got some more shares. So Planet, definitely looking to buy that one more. OC Store should be ramping throughout the summer, and Vegas Store looks strong. Dropbox, up about 20%. Dropbox is a deal. I want to be very, very clear about that. Dropbox is another one I look at, though, and I'm like, yeah, this stock's a steal deal right now. I mean, a steal deal at $22 is a joke for Dropbox based upon the cash flows they have coming in, based upon their net income and their revenue growth of this company and the just business model overall. But the problem with Dropbox is it's kind of in that Facebook camp, different than Facebook because Facebook's spending money like crazy. Dropbox really isn't, but it's kind of in that camp where I'm like, is this really, like, if I'm going to buy a stock, is that really the best place for my money, or is it an honest that I think is going to 3x or more over the next, let's call it 5 years, right? Because that's what I look at. I'm looking at like a Corsair that I feel like is an easy 2x to 3x over the next 5 years. I look at a Tattooed Chef that I feel like is the same thing. I look at an Honest that I feel like is the same thing, and I'm like, is Dropbox that type of stock? I'm like, it's going to do very, very well over the next 3 to 5 years, in my opinion, but I just don't think it has as much upside. So if I'm buying more shares of a company, and we still got to get to these two down here, it's tough for me to buy Dropbox, even though I think the stock's a steal deal right now. That's the toughest part. In a market where a lot of stocks are down significantly, many of these stocks, and not just these ones in this portfolio, but I'm talking about many stocks in general in the market, are down, 50% plus from their 52-week, from basically their 2021 highs. And that's the toughest thing for me is looking at it from this perspective and being like, it's not just about which stocks are down the most, but it's about what's going to be the best return on investment, right? And so that's a tough thing for me with something like a Dropbox. Elf on a Shelf is just a hold for me. They've done nothing but execute on that business model, but I can't buy it at the same time. I think there's better ROI opportunities, like an Honest for me. Avant Brands, very speculative company, but if you want to talk about a management team, Norton over there, who actually has his head on straight, that's leading a very small company, it's Avant Brands. So they're obviously a Jack Jackson player, down huge on this one, down about 61%. This is another one that just one of many, many stocks that got caught up in the retail hype, and then when retail left the market, it was like, where's my shareholder base? So Avant's actually one I'm going to probably end up averaging down on. I can't buy it too heavily because it is a more speculative play. When you talk about like a 20-cent stock, it's more speculative, but I actually do like that one a lot. Voyager Digital, another one I actually like a lot. Voyager Digital is kind of like my crypto exposure, and when I see Voyager Digital, I just see them getting bigger and bigger over the coming years, and crypto at the end of the day is not going away. Just bottom line, I don't care how bullish or bearish you are on crypto, like, it's not going away. It's going to likely get bigger and bigger over time as more use applications are brought out there. And Voyager's a big platform in that space. And so I look at that as like another stock that I'm thinking about averaging down on. There's a lot of competition in the crypto space, but I think they're one of probably 4 or 5 main companies that are going to be really successful there. I think about somebody like Coinbase. I think about somebody like Voyager. I think about FTX. And maybe 1 or 2 others. And I think those companies will be successful. So Voyager, I need to average down this position. It's a super small position. I need to definitely make that into a more significant position, maybe a 40K to 50K type position in this portfolio. And so, yeah, guys, I hope you enjoyed this. As always, that's a look at the public account there. I'm fully confident that account will be a $2, $3, $5 million account in the coming years. We just got to kind of let some of this time play out, essentially, and let some of these companies let them play out, let their business models play out, and let everybody kind of see in Wall Street come to a lot of these stocks. Tattooed Chef, they got to execute on numbers over the next coming quarters. Corsair Gaming, their comps get really easy after 2Q. A company like Honest, I mean, they've been doing amazing. They just need to keep doing amazing. And believe me, Wall Street will find that stock and it will thrive in the end. And especially once they hit profitability with a business model like that, that's what a lot of people are looking for. And the other companies, a lot of them just, executing phenomenally. It's just, market's been heavily damaged. I think about companies like Revolve, Skyworks Solutions, Tesla, a lot of those companies just continue to put up great numbers. So thanks so much for joining me. As always, make sure to subscribe to the channel if you want to be. It's absolutely free to hit that subscribe button. Also get some free stocks from Moo down there. Pin comment. Much love and have a great day.